The bond market is steering, and after our early alert yesterday, yields are now flashing serious signals of a potential bottom and the start of a new rally. The price action in US20Y is particularly critical as the setup becomes clearer. In today's update, we will perform a live Elliott Wave analysis together on the 20-year yield, digging into the microstructure of the current move and mapping out the most probable path from here. Has the next bullish cycle already begun, or is this just a pause before deeper declines? With yields rebounding and momentum shifting fast, the next few sessions could define the entire March trajectory for the bond market. Let's dive straight into the charts and study the waves. This is the signal I was talking about. And particularly, we talked about it yesterday in our daily wave update, saying that 20-year, 30-year, and 10-year yields all formed bullish engulfing candles. And it looks like today the green candle will just confirm this move. And note that it is not only pushing it above the 200 days moving average, which was crossed yesterday as a red line, and also the orange line, which is the 8 days EMA, and another strong support line that would be for 20 and 30-year yield. So, but this is not the only concern. Candles are good, but now if we have a look at the Elliott waves, this is another thing that I'd like to do together. So first of all, this is potential bottom for the 20-year yield, and this is what we are seeing here. So potentially this was an impulsive wave, and what is possible here, that the yield formed an impulsive structure here. So I'm also looking for another possibility here, which is this one, like two possible paths, and now we would be looking for either of them. So in any case, this is the minimally accepted possible structure for an impulse, and we all know what it means when the impulse is built off the bottom. It means that it's going to be another impulse upward, or a possible consolidation before it moves higher. So let's consider the two paths here. So this, let's say this is potentially wave one, and a very sharp correction here, and the next impulse upward is starting. So this would potentially be wave three of a bigger impulse, and we need to be looking for it. So that's another one. So let's try to measure it approximately. So this is the length of wave one, and the length of wave three would be somewhere between longer than 1 and closer to 1.6. So this would be our target, the most probable at the moment for wave 3. Now so let me put the rectangle here. That's the perspective if this is 1, 2, 3, 4, 1, 2 of a bigger degree, and wave 3 here. Another option here is that wave 3, 4, and 5, now it is complete as wave 1. So let's move it here. So that would be wave 1 in blue. And for wave 2, we would be looking for a bigger correction. So, and it would be an ABC, some sort of wave. Either it's going to be a zigzag or flat. We don't know this yet because potentially for the blue count, the impulse has just been complete, and we might see a consolidation for several days. That's the perspective. And once wave 2 complete, we would know exactly the levels. We would be able to forecast wave 3 for the blue path. It would be somewhere there or higher. We don't know this yet. So that's the perspective for the yield. And what does it mean for TLT? That's the biggest concern. So this was our chart that we've been tracking for a while. And possibly, if we see a strong reversal here, we might see a strong reversal also for TLT. And this wave, unfortunately, we cannot say exactly, because wave is very young and it has a couple of gaps. So it's somewhat difficult to forecast it. But this could be the perspective, technically. If we are seeing an impulsive, bigger impulse here, this would be it for the most recent rally. And we were talking about multiple times. So if the wave reverses here, I would say that the wave C would be almost ideally equal to wave A, the length of wave A. And this would be a very nice zigzag. So this wave A breaks into the ABC itself, then we have a wave B, and the wave C is an impulse, a very short but very structurally well-structured impulse. So that's the perspective for TLT, and there is a possibility of a reversal. But let's ask the candles. What candles are thinking about it? This is the chart that we discussed yesterday. TLT formed a very strong bearish harami candle, and today, if it closes like this, if it closes below the yesterday's low, it would be a confirmation of this harami, and we would be expecting a move lower. So this would be bearish on the daily frame. If we look at the bigger frames, which also closed today, this is the 2-day frame, and it will be a strong inside down candle with a very good technical support. And on the 3-day frame, it's kind of disastrous candle, I would say, because it had a chance to form a continuation, but it failed. And now it is forming a bearish candle, and it would be a hammer of some sort if it closes like this. So almost 3 hours to go, and so far we are not seeing the perspective for a reversal. And this would be, so this is another chart that we are not talking about. So now we have a clear picture. We have TLT candles supporting a bearish reversal. Now we have the yields, and across the line, I would say, so even 5-year and 2-year, they are bearish, they are bullish right now. And if they push a little higher, it will be even more bullish. And it looks like the 30, 20, and 10-year are gaining speed and are going to close and going to confirm a reversal on the bullish engulfing. So the chances are very strong that this is going to be a reversal. So stay alert. We will discuss the closure in our waves daily, and we'll see how it closes. So if there is no surprises before now and the end of the day, this will be a bullish reversal. So the bond market might be standing at the edge of a major reversal, and the 20-year yield is leading the charge with what could evolve into a powerful impulsive wave of a larger degree. Whether this becomes a lasting rally or meets sharp resistance, we'll be tracking every candle and the wave it unfolds. Stay with us for real-time updates and daily Elliott Wave insights in our Market Waves report. And be sure to explore our detailed bond coverage inside the strategy package at investingangles.com. Subscribe to our YouTube channel and follow us on Twitter, Telegram, and Reddit so you never miss the next major move. Thanks for watching, and as always, happy trading.